Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So we came in today, futures were up a little bit after yesterday's follow through to Thursday's potent down open. We knew we had to watch 1306 to 1309. We knew Spider's low yesterday was 130.85. So we had some data to trade against. And what I thought was interesting is the telltale. Sometimes you see like a fix that's in. And that's when Merkel came out and said, as long as she lives, there's going to be no debt union. And everyone just started selling the market. And I think that's actually when I tweeted, I'm like, you know what? They just hit this market so hard and it didn't break yesterday's low that chances are it might be a grind, it might be a slow lift. But, it's worth getting on the spiders, against the low of the day, which we did try a few times to get stopped out with. If you look at the chart of the SPX, you'll see after hitting this peak right into Fed Day last Wednesday-ish, we had a sharp move lower. This potent move was met with a small bounce on Friday, and then yesterday we had some follow through to this weakness, and then really the only point of reference besides opinions was right here. Okay, this was the floor that held. This was also the right shoulder of the inverted head and shoulders pattern. So now at this point, I think this pattern is, somewhat done with. It was a great gauge. When you had the taking back of the 200-day, we moved off the lows. We held, showed some commitment. We had the measured move. Remember, we talked about the depth of the 30 handles here. That's what gave us 1360, and that's what gave us the sell signal. And now, we pulled back probably a little faster, a little harder than anyone thinking that the dip was viable. But if you really take a look at it, we talked fib retracements. If you go from the low here all the way to what was the high of that move into Fed Day, what we did hold is the 61% retracement. And I know here it shows that commitment did not come in at the 25%, showing a really strong market. It didn't come in at the 38.2, didn't come in at the 50. It came in here with another prior point. So at this point, usually most intermediate trend traders like myself start to throw in the towel, and that's when sometimes they could shake things up. So today, I came in thinking that we'd have a day like Friday where everyone's going to want to sell the market. Same way like after this big move, everyone wanted to sell it on Friday, but it closed near the highs, but then look what happened. So we'll see what happens tomorrow. There were some decent stocks that acted well. And every time the market wants to bounce, you still have the haves and the have-nots, and then you have the oversold bounce trades also. So there's a group of stocks that continue to trade by the rules. Now today, a lot of guys got on top of Amazon early because there was a price point around 225. Didn't get through there with authority, but guys made money here. And if you look at the chart of Amazon, it's playing by the rules. You have this earnings gap here. It loves to trade from little flag type patterns. This was one time that was a nice buyable move. I actually did it a few times. It did it here where it was descending, broke to the upside, descending, broke to the upside. And hey, look at this, another descending type flag that broke to the upside. It didn't clear this pivot area with force because I don't think the market wants to trust things clearing with force. But it was a nice trade. It's open to pretty much get back to the highs. It's in the game for higher prices. It likes to bounce when the market bounces. eBay, guys that missed a breakout, bought it on the retest, and if you did, it's still acting by the rules. Here was that breakout day. If you remember, we talked about it at 41.60, gave you a nice 2-day move, pulled back, retested, and a little lethargic move to the upside, but it was something. If you bought here, now we'll see if it could hold above here. Also, on the social end, LinkedIn, to me, this chart looks really good. I know I got sucked in at the end of the day, so I'm holding this thing overnight. This came in with the botched Facebook deal, but ever since reclaiming this 100-day, it's acted much better. This was one little area that we talked about clearing right around this 98. Nice move, and now it's flagging. Closing near the highs, you have a nice bull flag. So what that is you have the pole, and then you have commitment to it. And now it's trading right near this 107, 107.10. It'll be interesting to see that if we can get some follow through, to it tomorrow. So if it trades through 107.10, all of a sudden, it's back to the highs. And if you look at the weekly chart, it's one of those stocks that's acting really well. This is, I think, 1/10 the metrics that Facebook's trading at, meaning that it's, if they were valued at the exact same thing, if they gave LinkedIn the same metrics as Facebook, I think LinkedIn would be like 300 or so. So anyway, there were a few IPOs I think on my list for the year. Was 3 IPOs that I thought were macro trades if that's what you do. LinkedIn being one of them, Dunkin' Donuts being the other one, and Dunkin' Donuts just gave you a nice little buy the dip. We talked about last time, I even think it was in Off the Charts, if it were to come back and retest this breakout area, because that's what they do. You never chase excitement, you wait for a retest, and so far it retested and bounced. So some guys were high-fiving on the virtual floor today that were able to buy back, that sold excitement, bought back, so they were holding tier 1, added tier 2, sold some, and said, you know what, let me get back to tier 2, I sold this well. So all in all, nice little trading action there. And Dunkin' Donuts, I still think, has higher prices and much higher prices in its future. New issue, not much supply out there, not that many shares, not many memories, little McDonald's, little Starbucks, and I think it's good. The other one, which has been a little faulty, is Coors. But overall, if you look at where Coors came from, it did pull back, but not so severe. Still in the game. Lately, it's been a decent trader. I know Sperling's been all over it. I don't think there's a setup right here, but this is the highs, right around 48. It came in, it's bounced off of 36 very well. With more time, I do think at some point it can continue. So those are the 3 IPOs that I do think, if you are a macro investor, they're worthy of holding and you have to trade around. As far as other high beta names, Apple's been a bit lethargic, but today it held above the 100-day. I know I made money actually shorted early on, and then some guys bought the dip into the 100-day. I'm not sure why it's acting so lethargic, but you do have somewhat of a descending little channel here. Nothing so drastic, nothing so severe. So I know I was buying it for a breakout above 589, didn't work. So at this point, on this little reversal here, I went along a little bit, and if it can start to break above this area, perhaps it continues. I do think the valuation here is top notch. I know that some guys made some money short here through this area, but last time it held the 100-day, it had quite a move. I don't think it's as pent up this time, but it's worth a look. Weaker high beta names. Google's been weaker, it's still bouncing around, but I don't think that's something that you should be getting involved in right now. Same thing with Baidu. As far as the banks, interesting. Goldman Sachs upgrades JP Morgan, gaps up, didn't make new highs. Morgan Stanley, they downgraded, gap down, and actually had better traction off the open versus JP Morgan. I think JP Morgan, at least it's kind of out of the firestorm, so to speak. You could trade this versus the lows here. I think over time, if it could put in a nice inside range here and consolidate this move off the lows. You guys remember when we talked about it, it was down 30 cents. They announced a $4.2 billion loss, and they bought the news since then. Nice move higher. So within this range, I think it would be okay to stay long it, and at some point, once it's absorbed this move off the lows, maybe it trades into this gap, which will be a nice trade. It's still well off the highs, and it is JP Morgan. They took 75% of the loss or so it's worthy of a look. I think Goldman Sachs continues to be one of the worst technically acting stocks. I know it's coming a lot from 130. It's barely hanging on the bottom here. I do think with a little time, seriously, if it cannot get back above this area quickly, when the market, or if the market wants to retest those lows, which it easily can, this is going to be a stock that will be shortable below 90, 60. And if you go to the weekly chart, the next real area is until, well below. Take a look here. Goldman Sachs at this point hovering here on the lows. Maybe it tries to bounce back, but at this point, I think that they're just not the same. I hate their trading calls lately. I hate their timing calls. I don't know why they make them. It's been pretty piss poor. Oop, whatever that word was, huh? Anyway, it could go to the downside here, so I would not be long Goldman Sachs. As far as a funny stock, guys are telling me to look at AOL. Seems to be the strongest stock on the market, and I have no idea why. I think ever since it's had this gap up, people have been trapped in it, and there's some funds that are just controlling it. I think what did it do? It spun off here. I don't even remember. But PS Chart looks pretty good. I'm not trading this thing, and I don't know exactly why, but some people are fighting this, and if it starts trading above this 27.30, it could go again. But just don't, people think it's prehistoric and done, and it probably is, but for some reason it's trading up. So if you don't understand it, avoid it. As far as some retail names, guys are still doing well with Costco, still methodically trading to the upside. Here's when it broke this little downtrend. I think this is when we had it on off the charts, right around 87. Nice move. Another nice little flag. Nice move. Now it's flagging again. Seems as if this thing wants to break above 92 for a new move highs. Looks good. Walmart still hangs around near highs. I wouldn't buy more here, but I would hold it. Target, not really breaking out. No exciting trade here yet, but it's still hanging above the moving averages. I think it's fine. Just let it go. Really, so far, like each, I would say, time period, there's been a different type of trade. And obviously the first quarter, we had a lot of success buying 13, 14, 15 stocks, trading around them, letting the market trend higher. Then in the second quarter, it's really been a hit or miss type tape. You could have shorted when the head and shoulders top pattern broke, then trading back and forth. And then finally, about 2 weeks ago, and I know Jill's been talking about the ags quite often, they finally woke up off the lows. She's been talking about being in tier one, third quarter story. So she kept reiterating it, and we're getting closer to the third story, or the third story of the third quarter, and they had a nice move. And CF is not coming up on the chart. Let's see if Mosaic does. Mosaic, I know, I beat her up a few times saying like it's not ready. Then finally it ignited, and this is when we talked about it with her right here. I said now traders will be looking at it. It finally broke this lower pivot, and you can even take a closer look at the red dog reversal just to show you how this works. All right, if you got involved saying I think it's a third quarter story and I'm waiting, here's your red dog reversal. It broke below the low here, 45.58, made a new low, maybe trapped some shorts, stopped people out after a big move. It reversed and then had follow through. Awesome day and a half move. Then it gave you actually a third day. And then what did it do? It held higher, held in there, creating this W type pattern where you have, this, boom, boom, and then here's your W, and then here's like almost like an inverted head and shoulders a little bit, and then here was your neckline. So if you missed the red dog reversal and you missed this 3-bar move, it held higher. This was your entry. So you had your entry above, just say 49, gave you a quick move to 52, and then I remember talking with her. I'm like, yeah, you know what? After a little rest, it's going to clear 52. So all in all, very nice move if you were waiting to time the ags. And at this point, the next real downtrend area to look at, maybe to sell against, would be coming right into here. So there's still some room here. And it was a nice timing scenario. Look at the last time it got streaky from here to here. So all in all, she loves the fundamentals. Finally, the technicals caught up, and it has some room still. POT also move off the lows. Gave you the similar red dog reversal, not as strong, but here it was when it made a new low, came back above, and then really it woke up right around here on this nice wide range bar. But this has been choppy, hard to tell, but again, from 37 to 42, not so bad. I don't know why I can't get the data on CF. Monsanto, let's take a look at that. Hanging around, probably one of the candidates to make new highs in this group, to show some leadership when it's ready. I think AGU last time I looked okay also. Let's see how that looks. Oh, look at that. Looks like it's ready to clear this upper area. Not much pain here for investors in this one. I guess it also was a good trade off that low too. Look at this upper level red dog reversal right there where it made a new low, came back above. You could have bought with this when it came back above this with a stop at the low of the day, had your follow through, came up, gave you some nice commitment as it held higher, and then here was that little momentum move. Then it came back, tested it again, and then here's another move. So that's how you continue to stay with the trade, and you could even use the tier system this entire way. So granted, we're now coming into some resistance, so it might rest again, but see now if it holds higher above this, stay with the methodical trade. Okay. That was the Wizard of Oz telling me how to get CF chart, but I'm just gonna get away from it. The Wizard of Parker. Anyway, gold. I'm really getting tired of this. It's still caught in this intermediate downtrend. Every time I try and cheat a little bit to get long, it doesn't have any follow through. Yesterday, There was a bit of a surge. I thought maybe it was a higher low from this 148.50. Came in, it was down. I stopped myself out. At this point, I guess if you're in a macro position, stay with it as long as it stays above this. But again, it's really being controlled by this intermediate downtrend ever since this reversal high here, and then this breakout failure on that Fed day that engulfed this entire move here. It's been trapped. And now, you look back here at some particular point, if it breaks this 148.50, you better reevaluate if you just think gold has to go higher, because it doesn't have to go higher. You go to your weekly chart and you'll see that it's coming into this crucial area. It's been consolidating this nice move. So all in all, just a corrective type move. But again, if it does not hold this area, your next real level, which isn't even that far down, 140, but that's about 8.5 points in the GLD. That's a decent move for active traders, is right there. And then you have this 125 area. So just be careful up here, guys. And then on the monthly chart too, you'll see, and look at the perch that it's sitting on. So just make sure if the perch gives way, you have an upper level stop. Same way you need some lower level stops, you want to have upper level stops to lock in some gains. So all in all, I think the market still has a lot to prove. IBD went back to market correction yesterday. They probably did it to be cautious because these June-July rallies typically do not work. So they're not flip-flopping, but they're just showing the composure, and that they're not afraid to admit whether they don't think it's the right area. They probably could have waited for one more distribution day, but instead they didn't, because there's only 2 distribution days. Typically you need 3 to derail a rally, and yesterday they didn't have the same volume, but obviously you had the Russell on Friday. So anyway, it's not a perfect environment. I don't think if you're a macro investor, you shouldn't be all out. You should be out of everything, because there's a lot of stocks that still act well. But as an intermediate, trend trader, kind of like us, you definitely need to be a bit more skeptical, take a little bit more tactical approach. If you're going to be long 3 to 5 stocks right now, make sure you have a hedge on just in case we gap down. So this way you could have the spiders as a hedge, and then you could rebuy back some of your stronger stocks that probably go positive the next day, so you could trade out of them. Every time we've had this big gap down, typically the strong stocks give you a way out. For example, if you went home long LinkedIn because you think it's going to trade over 107.10 and you're short the spiders, if tomorrow we come in, the S&Ps are down 5 handles, you cover some spiders, and then if LinkedIn shows relative strength, you could add to your position, add through 107.10, sell 108.50s, and that's how you manage positions with a hedge, and you could do that with a variety of them. And if it doesn't give you a way out, you salvage it, you get into a level that's comfortable, and then you figure it out from there. So all in all, there's action. It's not quick, but it is June. We're going to probably have a lot more of this, so just make sure you're not frustrated. You see things clearly. Don't push buttons because you lose your discipline. I kind of did that a little bit today towards the end of the day. Guys on Twitter and guys on the virtual floor saw me. I was long spiders all day long, and then I was down to like my last third. I saw the news about Germany being downgraded. I got out of my spiders, and then I shorted them. And then they didn't go lower, and I covered my short. I was out of my good spiders, and then I chased some stocks to the top. And we all make mistakes, and it's that easy to give away your day. And right now, during the summertime, it's hard to put a day together, so don't give it away. Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.